Hey there, welcome to today's Financial Talk. I'm excited to share something that could totally change the way you think about money and wealth. You know, there's this common misconception that financial success is all about having a high-paying job or making big bucks. But here's the truth. It's not about how much money flows into your account. It's about what you do with it once it's there. Think of it like catching water in a bucket with holes. You can pour as much as you want, but if you don't know how to plug those holes and use the water wisely, you'll always end up empty. That's why wealth management is so crucial. In the next hour, we'll dive into 10 game-changing concepts that will help you not just earn money, but actually keep it, grow it, and pass it on to future generations. Consider this your financial GPS, a clear roadmap to help you navigate the sometimes confusing world of personal finance. So buckle up, grab a notebook, and let's start this journey together. Part 2. The power of compounding. Compounding is the process where money generates returns, and those returns generate more returns. For example, $1,000 at 8% annual growth becomes $2,159 in 10 years. In 30 years, it grows to over $10,000 without adding more. The secret is time. Start early, stay invested, and let compounding work for you. Part 3. Asset allocation. Smart investing is not about chasing the hottest stock. It is about allocating money wisely among stocks, bonds, and cash. Stocks provide growth, bonds offer stability, and cash adds flexibility. The right allocation depends on your age, your goals, and your risk tolerance. Diversification is the shield that protects your wealth. Part 4. Index funds versus active funds. Index funds track the market with low fees. Active funds are managed by professionals who try to beat the market, but most of them fail over time. For most investors, index funds offer better long-term returns and fewer risks. In investing, simple often beats complex. Part 5. Blue chip stocks. Blue chip stocks are large, stable companies with a record of steady profits and dividends. Think Coca-Cola, Johnson & Johnson, or Microsoft. They may not double overnight, but they provide a reliable foundation for long-term investors. Slow and steady wins the race. Part 6. Tax-advantaged accounts. In the United States, accounts like 401k, IRA, and Roth IRA help you grow wealth faster by reducing taxes. Traditional accounts defer taxes until retirement. Roth accounts let your money grow tax-free. Maxing out these accounts can save thousands of dollars in taxes over a lifetime. Part 7. Passive income. Financial freedom is not only about growth. It is also about building passive income streams, money that flows in while you sleep. Examples include dividends, rental income, royalties, or automated businesses. Passive income gives you flexibility and freedom. Part 8. Risk management. Markets always go up and down. You do not have to ride every wave. Use diversification, stop-loss tools, and hedging strategies to protect your portfolio. Wealth management is not only about making money, it is about surviving tough times and staying in the game. Part 9. Retirement planning. The earlier you start, the less you need to save. A 30-year-old investor needs less than half the savings of a 45-year-old to reach the same goal. The key is consistent contributions using retirement accounts and adjusting asset allocation with age. Retirement is not about stopping work. It is about having choices. Part 10. ETF investing. Exchange-traded funds, or ETFs, allow you to own hundreds of stocks with one purchase. They are low-cost, tax-efficient, and easy to trade. Whether you want growth, dividends, or specific sectors, ETFs give you instant diversification. For everyday investors, ETFs are a powerful tool. Part 11. Wealth transfer. Building wealth is only half the journey. The other half is transferring it to the next generation. Estate planning, wills, and trusts ensure your family benefits, not just taxes. Wealth transfer is about creating a legacy that outlives you. Part 12. Conclusion and call to action. We have covered 12 parts of wealth management: compounding, asset allocation, index funds, blue chip stocks, tax-advantaged accounts, passive income, risk management, retirement planning, ETFs, and wealth transfer. Wealth is not built in a single day. It requires discipline, patience, and continuous learning. Thank you for watching. I wish you success on your financial journey.